I'm AJ Trott.
And I'm Jeff Swiderski with AnnieMac Home Mortgage's Momentum Group, your trusted partner in the home buying process.
At AnnieMac, we can strengthen your offer with our innovative program, Cash to Keys, giving you a competitive edge by allowing you to make a cash offer on your new home.
Together, we've helped over 1,000 families move into their dream homes, and we'd love to do the same for you.
Give us a call today at 401-486-0853 to get started. Hey everyone, I'm AJ Trott.
And I'm Jeff Swiderski with AnnieMac Home Mortgage's Momentum Group, and this is the Keeping It Real Estate podcast.
So what are we talking about today, guys?
So today we are going to just talk about overall market trends. I feel like everyone just, whether it's the news or, regular conversations, coffee shops, anywhere you go, talks about, oh, it's such a hard time to buy. They hear horror stories about losing out on offers, just inventory being an issue, rates being up, all of these things. And, doom and fear seem to sell best. So really just wanted to speak to, it's not all doom and gloom. There are, still plenty of people becoming first-time homeowners. There are plenty of people moving up, moving down, whatever it may be, and just, strategies and things that you can do to be prepared to do so.
Awesome. What are some of those strategies? What are some of the things that you can do to be prepared in this situation?
Yeah, so we spent a lot of time last episode talking about just being prepared, right? And having your pre-approval done up front, talking through your income, your assets, your credit, all of those things. So that is still always the best place to start, again, from a preparedness standpoint. But again, in this market, what you're looking at is, for sure, there aren't a lot of homes for sale, and the market's been tight. It's been, harder to afford a house for the average person, say. So having the right team in place on the front end, having a trusted local realtor, we can certainly make recommendations there, having your real estate attorney, and then, of course, having your pre-approval so that all of those parties can work together for you as you see properties. If you're, putting the cart in front of the horse and finding the house first, and you're not prepared, then you're going to fall in love with the house. You're not going to be prepared. You're not going to have the strength of offer that you could have had if your whole team was, aware 3 weeks earlier of your intention to, really be wading into the waters.
It happens all the time. People just fall in love with that house over the weekend. They're trying to get the ball rolling, and it's too late. You got to be ready to go.
What are some red flags that you look for on a person's credit report history or on a person's, what are some things that you guys look for of this might be a problem that's going to stop you from getting to that dream home, and this is how we can help you fix it?
Sure. Credit wise, obviously payment history is a big part of that equation. Revolving use, believe it or not, in and of itself, even if you're paying your credit cards on time, just the amount of usage that you have on those cards can be enough to bring your scores down. So we do a lot of coaching on just bringing balances to appropriate levels, how to best allocate your assets to be able to get you in the best position to get the best loan we could give you.
And, I don't know if it's necessarily credit red flags, but things that, primarily hold people back in those situations where, you find the dream house on a Sunday, you have to have your offer in by Monday. A lot of that actually generally comes from the income side of things. If you have, overtime or tips or bonuses, just commissions, anything that isn't your regular salary employee, we have to have a realistic average of what that income is going to be moving forward as well. So if you don't have a verification of employment from the employer breaking that income down, or if you don't have your last pay stub that you received for each of the previous 2 years from your job, it's hard for us to have that calculation. So for us to be able to say, yeah, you can 100% get pre-approved and buy this house and make an offer tomorrow, it can be a tall order for anyone.
What do you look at when you're looking for income verification? Do you look at pay stubs? Do you look at tax returns? What do you look at? And do you have to look at everything? Do you have to look at both, or do you have to not, what's the deal with that?
Well, it depends on the nature of the income, right? So we're big on the less is more front. So the less work we can put on you as the customer, as the buyer, the better for everybody. So if there are pieces of your income, if you've got, your regular job and you have a side business that we may not necessarily need to address, well, if we can qualify you on just your main job and your straight salary, we're going to do that just about every time. So to answer your question, in those situations, just a couple of pay stubs, the last year or two of W-2s, and that usually does the trick. In the cases, as Jeff mentioned, where you're introducing tips, overtime, in nursing fields, you get the shift differential income that can be challenging. That's where we need to dig a little deeper, go to the employer, get that breakdown of the history, and we're averaging that out over a couple of years in most cases.
What about for someone who is self-employed?
Self-employed, we're going to ask for your tax returns, 9 times out of 10.
Yeah.
For self-employed folks, there is the challenge. Sometimes a good CPA is going to have you write off a lot of that income. You may not show, a healthy bottom line as far as qualifying goes.
Yeah.
In those cases, we do have the bank statement options where we can qualify off of either 12 or 24 months of your business bank statements and circumvent having to get those tax returns.
Okay. It's the holiday season. It's the holiday season.
Can you sing it for us though?
It's the holiday. No,
There we go.
I can't. I can't, and I won't.
Number one, you can.
I can't. I can't. You're thinking of the other guy.
Okay, fair enough.
Not Patrick though, Dave.
Yeah, 100%.
Yeah, but anyway, it's the holiday season. We have a tendency, obviously, as consumers and people that want to, provide the best things for our family and loved ones. Many people put Christmas on a credit card.
Mm-hmm.
How detrimental could that be to someone who also wants to buy a house in the next 6 months?
Loaded question. So, anytime you think about debt in general, anything that is a payment on your credit report, whether that's a car loan, a student loan, in the conversation we're having, a credit card payment, whatever that minimum payment is directly correlated to how much house you can buy. So if you all of a sudden increase your, credit card bills by $250 a month, you can now afford $250 a month less in mortgage payment. So, what does that mean? It could easily mean tens of thousands of dollars in purchasing power on a house. So, if you were looking at $500,000 houses, maybe you're looking at $450,000 houses for a little while.
Yeah.
So it's, it's kind of that whole financial picture. And, of course, we don't want to see someone, putting themselves in a bad financial position anyways. If you're already, kind of maxed out on other payments, does it make sense to take on a mortgage payment at the same time as well? So there's some balancing act there.
Yeah. And on average, the people that we talk to, if they get to us early enough in the process, we can kind of game plan that out too and give them their budget. If you did put this much on your credit card and your payment went up by this is how it's going to affect your purchasability.
Mm-hmm.
So if you're thinking about buying a house in the next year, and you're also thinking about putting a lot of stuff on your credit card this holiday season, give Trott and Swiderski a call just to game plan on that and see what's up.
Absolutely.
So there are a bunch of questions that I have for you guys that are questions that we got asked from last week. What kind of credit score do I need to qualify for a mortgage?
Yeah, I'd say our lowest bucket tends to be a 580 and up. There are options there, although limited, especially for the first-time buyers out there. If you're trying to take advantage of the down payment assistance type options, we would encourage you to give us the call early so that we can coach you up from there. Those programs, you're going to want to try to be 620, 640 and up for the most part.
Mm-hmm.
Income requirements. We already talked about that. What kind of documents to show income will you need?
Mm-hmm.
Is there an ideal debt to income ratio?
Again, loaded question. Good question.
Yeah.
So it honestly, it depends on, I would say, other expenses and lifestyle, because if you are, I always use the game as a percentage, right? So if you think back to the old, quote, rule of thumb for our parents' generation, they always said, keep your housing payment to less than 30% of your take home income,
right?
Which is, a great way to make sure you had enough income to do all of the other things you needed to do, whether it was cars, groceries, whatever. So when you think about that in, we'll say, the 80s, and you were making, median income, give or take a couple $1,000s a month, it made sense because, you figure if your housing payment is $600 or $700, something like that, that leaves you with maybe $1,400 to get through the rest of the month and do all the things you need to do. So, it sounds realistic. When you pull that forward to 2024, if you figured your after-tax income and you make, whatever, we'll say $120,000 a year just for simplicity. Yeah. So you have $10,000 a month in income, you pull some taxes out of that. So you're going to keep yourself to only, we'll say $2,000 a month mortgage payment. Well, if you still have, $6,000, $7,000, $8,000 a month in residual income after that, I think you could look around and find anyone that would say they could live on $6,000, $7,000, $8,000 a month. So yeah. That's why I say that number can certainly skew higher. If you have $2,000 car payments and things like that on top of it, maybe you do want to be a little more conservative with that number. But yeah. In the world of increasing income, it's certainly a moving target. But I would say, if you can stay 40% or less, that's probably a good generalization.
How long does it typically take to approve and the whole approval process for a mortgage?
Yeah, so it really depends on how on top of it our buyer is, right? So in our consult, we're going to go over options. We're going to review the profile from top to bottom, credit, income, the whole nine. We're going to put together a game plan. We're going to get you out that list of the exact paperwork that we would need for your scenario. As quick as you can turn that around to us. I mean, we're doing full pre-approvals, within an hour, right on the spot. It doesn't take much to do that. To take it a step further and go through underwriting, it's typically, what would you say, a 24, 48-hour process in most cases.
Yeah, a couple of days.
Obviously, the more complex profiles may take a little bit longer. And if you're taking advantage of our cash to keys option, we would ask for a full week plus in those scenarios to get you fully documented, underwritten, and ready to go for the cash to keys program.
That makes sense. Mm-hmm. We have a question here about taking over a mortgage. So this person said that their elderly parent still has a mortgage on their house. Mm-hmm. And is looking to transfer it into one of the child's names. How does that happen?
So it is.
Is that possible? First of all, from a mortgage perspective, is that possible?
Potentially.
Yeah.
So it's become a little more popular. Just anytime you have interest rates rising, people want to keep that low interest rate on the existing loan.
Yep.
So it's what's called an assumption. You're assuming that old mortgage. It's possible. It ultimately depends on, number one, the qualification of the person that's trying to assume the loan, because they do have to qualify to carry that payment. And it does actually depend on what type of mortgage it is that exists now. Some mortgage types are easier to assume. Some have clauses that they outright are not assumable, meaning you can't do it.
Yep.
So that question is always actually going to go directly to that mortgage company, whoever's servicing the loan, meaning, wherever grandma and grandpa are making the payment.
Yep.
You'd reach out to that company, see, what they know about whether or not that loan's assumable, and start there.
And would you, if that's not an assumable situation, mm-hmm. then you're looking at, if somebody still wanted to do that, would I assume that then you're looking at the younger person in the family trying to get a loan for the existing amount of the loan that is still out on the parent or grandparent's mortgage?
Spot on. And in familial situations, the assumption here is that the grandparents are trying to, basically give them the house and the equity within the house, so they can actually, quote, sell it to them with what's called a gift of equity. So they aren't looking at a traditional purchase where they have to come up with, 5 or 10 or 20% down. They're going to use the equity in the property as their down payment. So to your point, they'll still, resulting just take out whatever amount of money that mortgage is.
Yep.
And then they'll own the house at, full value.
So the house would remain, if it's a $400,000 house, for example, it would remain a $400,000 house, even though maybe it's sold for $100,000 $100,000 because that's what grandma has left in it.
So therein is the fun is they would actually still sell it as a $400,000 house, but
okay.
but they would give them a gift of equity for whatever that difference is between the two. So if it was $100,000 mortgage, they on paper give them a $300,000 gift. There's no real tax implication. Talk to your CPA. I'm not a CPA.
Disclaimer.
Yes,
But,
yes.
if you look up and understand IRS laws, you can gift over your lifetime like $18 million right now. So 300 grand, you have to report it to the IRS. There's no actual tax implication.
Yeah. Very interesting.
Mhm.
And you guys probably didn't think that you got this many questions.
I love this.
This
though.
is great.
Yeah.
Let's see here. Closing costs. Closing costs is something that I hear a lot about, but I have absolutely no idea what that is. What are closing costs and what do they include?
Yeah, I'd say the bulk of any closing costs really pertain to which title attorney you pick. I mean, things like title insurance, document preparation, that's going to be the bulk of your costs with any of those scenarios. Attorney can always be shopped around. We've got some great, fantastic partners that we can refer you to that do very well on that category.
Mm-hmm. Some that are local here in West Road.
Yeah, absolutely. And then I would say, the other stuff is largely housekeeping, right? What does it cost to actually produce your loan? So things like your credit report fee, where we're pulling your credit, there's a fee incurred. Verification of employment forms cost something. So that sort of stuff is itemized in that category.
And then the second half of closing costs in any transaction are going to be costs that aren't necessarily associated with the transaction itself, but home ownership itself. So you're buying a new asset, you have to insure it. So insurance is always prepaid. You're going to actually generally prepay the full first year of home insurance. If there are any taxes due in close proximity to your closing date, you're going to pay those real estate taxes at closing. So I wouldn't say it's a 50-50 split, but that's a pretty good generalization between actual cost and the cost of just taking ownership of the house. To kind of generalize that, this isn't going to be, specific to any individual transaction, but on average, all inclusive of those things, you're probably looking at a $10,000 price tag. And again, Rhode Island housing, Mass housing, Connecticut housing, you can usually as a first-time buyer, subsidize some of that cost through state options.
Wow. Very, very, very informative. And we have a couple questions. Last question that I'm going to ask, but we have a couple questions about just more information on the Cash to Keys program. I think that's the thing that we advertise in the advertisements for you guys on 321. And it's the mortgage moment that pops up with your caricatures. That's another thing. The three of us, I think, are the only people with caricatures.
I love that.
That's excellent.
The Breakfast with Ben caricatures me like like I'm making a good point about something, which I rarely ever am. But tell us a little bit more about Cash to Keys.
We're gonna have to have a caricature breakfast with Ben soon.
That's right.
Oh yeah, yeah.
So Cash to Keys, again, it does take a tiny bit more time on the front end in terms of the pre-approval, but to give some context to what I wanted to talk about as an overall today, when interest rates have come down at all in the last 2 years, it actually just happened for the information release was this morning, so this is perfect timing. For the months of, we'll say, August and early September to mid-September, interest rates had come down. They were at, pretty much their lowest levels of the year during that time frame. And then during October, rates did come back up quite a bit, and they've kind of leveled off there. But what happened was during August, September, there were more signed contracts, which led to more real estate closings in October than last October. For context, that's the first time year over year there have been more transactions of existing homes in the last 3 years. So we've seen this every single time rates have started to dip in the last couple of years. Rates come down a little bit, all of these home buyers jump into the market. They can't get in fast enough because they realize that there's a little bit more in terms of affordability, monthly payment. They're going to be able to afford the house they want.
Everyone wants the dip, right?
When we talk about preparedness, that's the real life example of why. Because what's going to happen? Home values are going to continue going up. We can do an entire episode on this, but if inflation continues to go up, that means the economy is doing well. And during inflationary times, asset prices go up. A home is an asset. In the reverse, If the economy does start to slow down, then you're going to see interest rates come down. Guess what? More people are going to jump in at an even faster clip then. So it's simple supply and demand. You're going to have so much more demand that people are going to be ripping their heads off to try and make the best offer, the best offer, the best offer. And that will lead to rising real estate prices. So unless we have some mass unemployment event in the country, it's going to be very, very difficult for home prices to come
Knock
down.
on all of the wood in front of you.
Yes. We don't want mass unemployment. No one should ever want that.
No.
Yeah. So again, in the two baseline scenarios, it leads to real estate values going up. So all of that to say, if you jump in when rates come down, number one, you're in a more competitive buyer pool. And yeah, there will be a little bit more in terms of affordability, but you're probably paying a higher price for the home at that point.
Yeah.
If you're prepared ahead of time and you're fully underwritten with cash to keys, you are truly making a cash offer on the house. We are basically looking at that buyer and saying, we've reviewed their credit, we've documented their income, we've documented their assets. They are as, bulletproof can get. Like, barring them losing their job, we know they are closing on their mortgage. So we're willing to actually put an addendum to their offer that says, if for any reason that client can't purchase that house, we will buy it cash. So from the seller side, there's a cash offer on the table. They don't have to worry about that person's financing any longer, because they know if somehow they lost their job or any of those scenarios that could possibly happen, we will still, as a private equity firm, buy that house cash. And ultimately, as soon as that person's gainfully employed again, whatever the case is, sell it back to them. That's always the end goal.
Right.
We're not here to buy houses.
Yeah.
So that's really the power of cash to keys is, say you're going in against another cash offer. A third of real estate transactions in the country are closed in cash offers right now.
Wow.
A third.
Wow.
Crazy. So how do you compete with that if you have a mortgage contingency? And again, that seller is looking at getting the best terms. It's not even always the best price from a negotiation standpoint. They're just looking at it saying, I know for a fact that this cash offer is going to close on this date, and it's going to go smooth for me to, go on with the rest of my life, buy my next house, whatever that is. So we alleviate that for the person that's getting a mortgage by backing them with cash, making them a cash offer. Literally just had one accepted this morning. Exact same scenario. It was a young couple. They, otherwise wouldn't have been able to buy the property cash. They went up against a cash offer. We all sat there and talked through it. They did ultimately actually pay $5,000 more than the other offer. But that listing agent would have been advising her seller client to say, it's $5,000. It's not worth the risk.
Yeah.
But because they were cash backed and it's cash guaranteed,
It's the sure thing.
That makes the difference.
Wow. And thank you for the education there, especially on the interest rates, because we hear words about interest rate and inflation, and we feel it at the grocery store, and we feel it in, all of those things, and looking at the interest rates and but having the conversation of, this is what this means right now, and this is what this means from experts makes a huge difference. So thank you guys for that. And it's interesting, and you definitely don't want a mass unemployment event, and you definitely don't want, we would all love for inflation to go down, but we don't want the economy to slow down either. And it's complicated. And when it's whenever things get complicated like that, and it's a whole big wide world view of things, I really like to go, okay, what do I have to do though? What do I have to do right now? And if you're looking to get into the housing market and you're looking to purchase a home, that's important.
I couldn't have said that better myself.
That's right.
Yeah, I love that. Yeah.
Thanks, man. I had a little bit of an anxiety attack there at the end. I don't know what happened. I just got caught up I was like, I can't land this plane right now.
Yeah. That was deep.
Smooth landing.
Yeah.
So, and that's everything that you guys have been talking about, in the last few minutes of, what are the red flags on my credit report and my employment history that would prevent me from purchasing a house right now? What is it that I can afford? How do my credit cards, and debt to income ratio do this? all of these fantastic questions that were asked by our viewers
Mhm.
and your fantastic professional answers to them. Really, like, that's taking that 30,000 foot view and then narrowing it down to, okay, what is my circumstance?
Here's your game plan.
Because really, when it comes down to it, no matter what the interest rates are, no matter what the home prices are, no matter what your, all of this stuff is, it comes down to, what can you afford?
Mhm.
What can you afford? What is out there, and what programs are out there, whether it be cash to keys or down payment assistance or something. What's out there that can help you individually? And everything is so individualized
Yes.
with this situation that really all you need to do is call Trott and Swiderski.
It's funny you say that. I actually had a Zoom meeting yesterday. Perfect example. It's a client I've been working with. There's no cost, no obligation to this. Just as a reminder to anyone that is listening, there's just our time, and we're happy to give that from an educational standpoint, long-term wealth building standpoint. We're here for it. But this particular client, she had asked, she's self-employed, said, I want to be prepared come April. I want to know exactly, if my net income is this, what can we do? That sort of thing. So we hopped on a Zoom with her and her CPA, actually talked through it. We came up with a holistic plan of, okay, if you do show more income, this will be your tax liability. And she sat there and said, okay, I already have this much saved. And, it was a game plan for a lot more than just buying a house. It was her entire long-term future, where she wanted to be, goal setting, what all of those, different things are going to mean for her down the road. And that's the stuff I love. I really genuinely do. I think it's awesome to be a part of someone's life and, get to have them see, 5-10 years down the road,
Right.
those goals actually becoming real.
And the key is starting that conversation early, right?
Yes.
As you mentioned, we're here in November and she's looking out to April, May, June, right? So it is important to get in early and have those conversations now.
Absolutely.
I love it. Thank you guys so much. Is there anything else you want to cover before we go?
No, I just want to say thanks to the viewers for the questions.
Yes,
that's
great questions this week. Yes.
That's the best way to know what
Absolutely.
everyone needs and wants to
Keep
talk
them
about.
coming.
So, yeah.
Absolutely. And if you want to get more information, you can click the link in the description or give them a call. All of that information is already in the description of this episode. So
Awesome.
Thank you guys so much. AJ Trott, Jeff Swiderski.
Thanks, Ben.
Thanks, Ben.
Hi, I'm AJ Trott.
And I'm Jeff Swiderski with AnnieMac Home Mortgage's Momentum Group, your trusted partner in the home buying process.
At AnnieMac, we can strengthen your offer with our innovative program, Cash to Keys, giving you a competitive edge by allowing you to make a cash offer on your new home.
Together, we've helped over 1,000 families move into their dream homes, and we'd love to do the same for you.
Give us a call today at 401-486-0853 to get started.